handover from the world, or rather the globe, has been a little bit weak, much unlike the 2 days of support that we were getting. The fact that we managed to inch up so nicely yesterday, we made it back to almost closing in with that 22,900 print. Today, maybe, I don't know if we're going to continue tracking global cues or not. We may be pegged back because the handover has been weak. It's a 1% dip coming in for the S&P 500 index. The Dow knocked off for nearly about 300 points, and the Nasdaq as well had it rough. About a 300-point knockdown is what they saw. All eyes are just on the federal rate decision, and I guess the markets are waiting with bated breath. Asia seems to be picking up on that sentiment. You've got Hong Kong and Shanghai, which are down about nearly 0.5%. Japan is still holding up in the green. Is the Bank of Japan meeting, which is also underway, which is going to be in focus. But for us, what a spectacular rebound yesterday.
You know, it's not yesterday, Aisha. I think this rally has been in the works, so to speak. I mean, markets have become extremely oversold. Everybody was convinced that FIs will only sell, dollar index will only go higher, and American markets will not come down. So a lot of factors which in a sense were the so-called tail headwinds, they've now started evaporating one by one. So yesterday's price action, I think, more than absolutely, it was not driven by news per se. It was a function of pure short covering. And you typically see this happening when one section of the market, which is in this case FIs, they've started to change their positioning. It started with short covering in the F&O market. Now net longs have actually started. The net longs have been quite impressive, 18 to 24%. Now you can argue back and say that, okay, FI buying means strong hands are coming back. FI buying means that the seller in the market seems to be going away. So I think in the near term, it's all about not news, it's about technicals. I think, and somewhere I think the technicals are looking quite favorable, because we are going to be going through that patch where global cues are okay. Locally, the desire to cover, the compulsion to cover short and the desire to trade long, I think seems to be making a comeback. So I will not be surprised that if the market, at least large cap stocks, they continue to inch higher, the bias is positive. Now it's a big question which I'm not very sure right now, that how essentially the small and the mid cap space will move. In a normal market, you would say large cap would move and small cap would catch up. That's how you would say. But I see it happening differently, and just purely based on what I've seen market over the years, is that when you see a large fall like this in mid and small cap stocks, and when you see markets, they are coming back, in the first uptick, the space which has got bombed out the most, small and mid cap space, that will actually see supply. You know, let me just use an example. Let's say somebody bought stock worth 100 rupees. It went to 70. Now it's gone to 80, you would say, nickel low. I think that nickel low or beige low, I think would be at play. So you will definitely see large cap outperformance and mid and small cap stocks where you will not see they will catch up with large cap stocks. Similarly for mid cap mutual funds, I think that some redemptions will actually start there.
If you like this video, then like, share and subscribe to ET Now.